Hey guys, my name is Nicolette Mashile. I'm also known as the Financial Bunny. Welcome to the Financial Bunny TV. Today I want to talk a little bit about optimizing your banking, right? Often what I find with myself personally is we pay small little fees or we don't optimize our banking well enough that we end up actually just hurting our finances. I'll explain a little bit about how that happens. But also the other thing is we actually have just put so much trust in the banks that we don't realize that the banks can also make mistakes. And I'll tell you a story. So, guys, so I went to trade my car in, right? So I traded my car in and WESBANK was the company that eventually agreed on the interest rate that I was looking for, obviously, when I got my new car. So you know how a trade-in works, right? When you trade your car in, the bank, well, essentially the dealership that's trading a car for you will settle the outstanding balance that you've got on the car that they are buying from you. Because that's what a trade-in is. They buy a car from you and you promise to buy a car from them. That's basically what trading in is, right? So essentially, they're going to buy my car that I had, settle it with the bank so that it becomes their car and they own it. And then I have to apply again for a new credit facility to buy the new car. That's essentially what happens. So we did all of that. WESBANK, as I said, was the bank that came to the party in terms of helping me out. And they were like, sure, we'll give you this credit facility that you are looking for. All right, not a problem. They sent me the installment. I'm happy. I signed the in-contract form or in-contract agreement that they sent. Everything was beautiful. I got my car, drove my car, had my car for a month. And I had my car for a month. That was now the first installment that's obviously going to go off. So the month in which I did the trading was the end of May going into June. So obviously I expected that the installment of the old car would still go off, right? Sharp, it went off. In July, the new installment of the car goes off. Okay, great. I'm grateful for that. And then I think now it was like towards the end of June for July, right? So on the 1st of July, another installment goes off and it's the old car. And I'm like, hey, what is happening here? I've literally, in a space of 2 days, been debited twice by WESBANK. And at this point, I didn't actually realize what the debits were. I thought maybe we had put in 2 different dates of debit order dates. I was like, okay, no, it must be something that we can solve. So I call dealership. I'm like, did you guys not settle this car? Oh, I logged into my account and I realized the old car, it's still showing, still with an outstanding balance. As if I've now got these 2 cars on my bank account. And I'm like, there's no ways. So I go call the dealership and I'm like, guys, what's happening here? I thought you guys settled this thing. The dealership is like, yeah, we settled it. They even sent us the e-notice document. I call WESBANK. Can't get hold of anybody that can give me straight answers. No, it's because I said, no, guys, there's no way that my account can go. I can be debited twice. 1. 2, it's still showing an outstanding balance on my accounts. You are messing up with my credit life and my credit scoring, number 1. So if I were to apply for another loan right now with the company, they will think that I'm over indebted because I have like now so many cars on my profile and I'm owing on these cars. I said, no, please stop playing these games with me. That's number 1. Number 2, you've debited me twice now in this month. Where do you guys think I get money from? In what world do you think I have so much money? Then the guy tried. I said, no. I called my banker. Now, my banker obviously does not. And this is the other thing about banks that is actually it's the most inconvenient thing for consumers. Banks work in these silos. So obviously, he's my banker at FNB, but he's not working at WESBANK. You get what I'm saying? They may have a link, but they don't work there. So from a FNB wealth perspective, they've got a WESBANK desk, or they'll have like a home loans desk, or they're like, so in the different levels. So you got your premier banking, your prestige banking, I don't know what they called, your black private clients, whatever, wealth, whatever. So they all have like little desks. They'll have like a service that they can help their clients if they've got like a WESBANK issue or a home loans issue. But essentially those different departments, home loans sits on its own, credit sits on its own, this one sits, and I'm just like, nah, that's an inconvenience for consumers. But I'm not going to solve the banking system. That's not my problem. Anyway, now, eventually, I get somebody that actually understands what's happening. Because the guy I'd spoken to, like in the beginning of the week, said to me, no, we will actually refund you only in 7 days. I said, you're not going to refund me in 7 days. Are you insane? First and foremost, you took my money immediately. Now you want to refund me in 7 days when you owe me money. Like, that doesn't work for me. What about if I now, if let's say, for instance, because I've got my mom's car also that is going through my bank account, what happens now if my mom's debit order bounces? What happens if my mom's debit order bounces because you guys have taken the money that I must pay for my mom's car? They're like, no, if that was going to happen, we will then issue. I said, no, guys. I said, you know what? Actually, that's not even a good example. I'm a business person. So for the 7 days that I'm not going to have access to the money that you have taken, I now cannot actually stock up, buy stock, pay for invoices, pay for my services, because you people are sitting with my money and you're telling me I must wait 7 days. I was like, no, you must expedite this thing, put it on escalation. Everybody in the bank must get an email to say, Nicolette wants her money. I'm not playing games with you guys. So let me explain to you why apparently this so happened. So apparently if you've got a capital balance that goes above the threshold of 500 Rand, the account does not automatically close. And I'm sitting there and I'm like, yeah, but you've got settlements. If you have a settlement, you should follow up, if you're working on a specific account, to follow up and make sure that that account is settled and it is closed. You cannot tell clients because your system has a glitch, because any capital balance that is above 500 Rand, which is your threshold, now all of a sudden now the account doesn't get automatically closed. No, you're playing with me. Because had I not had that in-contact service set up to receive messages, how would I have picked up that you guys have debited me twice? Because let me tell you, it happens. I've spoken to a couple of people. It happens that people are being debited twice for the same thing. And then the bank wants to say to you, you must wait 7 days. Or sometimes they say things like, it will run over to the next month. Excuse me, what makes you think I needed to run over to the next month? Who told you I don't have money for my next month's debit order? Who? Who told you that? So it's important to make sure, one, that you know your consumer rights. Two, that you actually track your spending and what is happening in your bank accounts. Tracking your budget and and how you're spending is one thing. Tracking your banking is important because that ultimately, for many of us, is the big portion of where we actually transact with our money. So our money is sitting in this machine called banking, and we've entrusted bankers and the banking sector to do that job for us. And look, on a normal day, they are exceptional. But this does not mean that they don't make mistakes or that they've got thresholds on their systems and the system has a glitch if this doesn't happen and it's a computer. If something looks different than what it's been told it's going to look like, of course the computer is going to jump it. So it's important to make sure that you are checking all of those things so that you can optimize your banking. But there are other ways, of course, in which you can optimize your banking. The first one is, let us avoid paying unnecessary fees. It's another thing that we do. We pay late payment fees or we pay bounce debit order fees. Guys, if you know you've got debit orders and you can help having money in your bank account, it's different if you don't have the money and the money's just not going to come in. But also, if the money's not going to come in, pick up the phone and call the bank and tell them, listen, you may run a debit order this month, but it's going to run on umoya or halalaleng. Okay? It's going to run on the Holy Ghost because there's no money in my bank account and there's not going to be any money in my bank account. So it's important to give the bank that heads up. But you've got to do it in time because remember, the debit order system is set up. I think by the time it's like mid-month, you can't actually remove a debit order. It's going to run through anyway because that's how the system works, right? So it's important to make sure of those types of things, that if you know there's not going to be money in your account for a debit order, don't let the machine run a debit order in your account if there's not going to be money, because you're going to get charged bounce debit order fees. We also pay unnecessary overdraft fees. You know you've got an overdraft. Is that the best facility that you need? And to be fair, I find the overdraft, especially on a personal account, to be such a weird concept. Essentially, you are saying the money you need every month is more than the money that comes into your bank account. Because why else would you need an overdraft? Think about it. An overdraft is your account being able to be overdrawn and go into a negative. Why does your budget need more money than what you are earning? If that makes sense. It shouldn't be like that. So you would need to work on your budget, because it means that you actually are living above your means. And let's just have a frank conversation. That's literally what it comes down to. You are living above your means. If you have an overdraft, especially on a personal account. I can see how it can look different on a business account, because things do pop up. Maybe now you've got a big order that has been come out of a client, but you don't have the finances. You go into your overdraft, but knowing the client's going to pay before and it's going to cover that overdraft. That makes sense. But if you've got steady income and it's predictable income, you should not be having an overdraft unless you are living above your means. I'm not here to shame anyone. I just want you to understand what the status of your finances actually look like, so that we can start crafting a solution to dig you out of an overdraft. Because an overdraft is a difficult facility to get a lot of people out of. It's a very, very difficult facility. In actual fact, it's so frustrating, because even when you have an overdraft, let's say, for instance, you go into debt review. Because you're not allowed to have debt, you means you can't have an overdraft. So you have to settle the overdraft, or you've got to convert it into a loan. So it's important to understand how an overdraft works and why you should not be having it if you don't need it. Why I say this is that maybe you do need to have those emergency funds or an emergency credit line. Then rather look at something like a credit card, right? Because that's a much better option. Most credit cards are 55 days interest-free. And if you settle your credit card before the month goes over, you don't pay interest on it. You pay literally on the money that you have borrowed. So a credit card may just be a better option for you. Let's say you are somebody that does have like these unexpected costs that come up in the month, but you still earn enough to be able to cover them. It's better than getting an overdraft. The next one is penalty fees. 32-day accounts. We take out these 32-day accounts. We know they are 32-day accounts. We know they are notice accounts, but we still want to withdraw money without giving the notice. If you've got a 32-day account and you need 5,000 from your account, you got to give 32 days notice. If you've got a 7-day notice account, you got to give 7-day notice. If you want your money today, the bank is going to charge you a penalty. So it's poor planning from us to want money that we know we put into a notice account, but we want it immediately. Because that means that you are going to pay late fees. It happened with me the other day. It wasn't even in a 32-day account. It happened on an investment account with Easy Equities. So on Easy Equities, if you want to sell your shares, right, you need to sell your shares. One, the market needs to be open. So in South Africa, the market opens at 9 o'clock. If you've got a USD account, you've got to think about the USD time a zone, so that you know when to sell, right? So you sell. They'll buy, right? Willing buyer, willing seller. So someone will buy your shares, right? Once your shares are bought, you will then have that money as money to invest. So you would need to withdraw it. So you'll go on withdraw and you'll press withdraw. But it will tell you how much you have that is withdrawable, and it will also tell you how much money you have, but it's not settled. Because Easy Equities as a platform has to settle. So they've got to take their fees. They've got to basically settle the amount of money that you've now received from selling your shares. And usually that takes up to like 72 hours. But the problem is, if you want your money immediately, they'll give it to you, but they'll charge you for it. So they can settle money. They even have a little thing that say, if you need urgent money, we are willing to settle your money, but you got to get charged for it. Everything in life is going to come at a price. The question is, at what cost and what are you willing to pay? So it's important to know that. What's the same with banking? Make sure that you are optimizing your banking. Another thing that I realized was, I used to do this weird thing with my helper. I would forget to pay her because it's not on a debit order, which I need to put on a debit order, but it's difficult because some months she gets paid differently for overtime and all of those things. But now the problem is that when I forget to pay her and we're on day 30 now of the month, and it's unfair on me, because why have you not paid this poor woman? Actually, I've got 2 helpers. It's so weird. I'll tell you guys the story of why I ended up with 2 helpers, okay? Anyway, I now want to do an e-wallet quickly and whatever, but e-wallet costs more money in terms of fees than I would have if I had done an EFT. So it's things like that. It's things like, if you optimize your banking and you actually plan your finances, you should not be running into these types of problems. The next thing is picking the right types of credit facilities. I've spoken a little bit about the overdraft and a credit card. Guys, it's important to pick the right credit facilities for the needs that you are looking to satisfy. Whatever need you're looking to satisfy, ask yourself, is this the right credit facility? Often I get a lot of people, especially in my coaching sessions, who say to me they're going to extended home, or they fixing the home, they're fixing the kitchen, it's whatever. Guys, you can apply for a building loan. You don't always have to take a personal loan or use your credit card to pay for those things. In fact, it's so expensive to use a personal loan to extend at home, because the personal loan, you're going to get an interest rate of 20 plus, obviously dependent on your credit profile and your affordability. But on a home loan, or which is actually a building loan, you may just get less. Yes, people are like, yeah, but on the building loan, now you have to submit plans, approvals. You know what? It's not a bad thing to do that. Because if you've done that, then at least you know it's done. Because why are you having builders extend your home who have no plans? They're just laying a brick after brick after brick, hoping this house does not fall over, or this part that you're extending is compliant. No, you don't do that. We don't do that. And we must be frank with ourselves, especially Tina Bantu Abamnyama, because we like cutting corners. And when we cut corners, we're going to pay for it eventually at some point. But if we do things correctly the first time, a lot of things become a lot easier. Personal loan versus home loan. Credit card versus overdraft. Pick the right credit facility that you need for whatever the need is. The next thing, closing down loans without reading what the penalty is or what the terms and conditions of closing your loans are. Guys, you need to read the terms and conditions of closing your loans. It's important. I learned the hard way again when I was trading my car in. It's important to understand that when you went to apply for your credit facility, you went into what is called a credit agreement. On the credit agreement, you agreed to pay according to a specific set of terms and conditions. The bank then calculates how much money they're going to make off you if they give you a certain interest rate at a certain term. If they're happy with how much profit they're going to make from you, then they will offer you the loan, right? So if the bank knows they're going to make 100,000 Rand of interest off you, and then you decide halfway that you're going to settle this loan, now the bank has only made 40,000 Rand. Of course, they need to penalize you if you are going to be settling early, because now you are essentially changing the terms and conditions of your loan. Yes, they don't make it impossible because the National Credit Act does not allow for that. However, that's why they've got a penalty on any credit facility that has a balance of over 250,000 Rand. You will get a penalty. Usually that penalty is 3 months, or, depending on what is the actual asset and what the credit facilities terms and conditions are. So it's important to also read those things when you are signing credit agreements. Understand, how do I exit this thing? What are the terms and conditions of exit? Also, because people don't know, there's a thing called an initiation fee when it comes to certain bank accounts, whether it's a credit account or a different type of account. Read, what is the cost of initiating this account? What is the cost of managing this account? Because banks charge you a management of account or a service fee. What is the cost of exiting this agreement or this account? All of those things are very important. Very important. Often I find this weird thing that people do where they'll change banks and change bank accounts. So let's say, for instance, you went and worked for a company that used Standard Bank, and then they were paying salaries at Standard Bank. Because you want to get your salary on the same day as everybody, you use Standard Bank. Then you move to another company and they use FNB. And because you want to get your salary on the same day as everyone else, again, you change to FNB, but you don't close the other account. The fees on the account will run. Same with businesses. People like to close businesses, or business goes dormant, or the business stops working. If the structure of your fees was that they are going to charge you for just having the account, those fees will still run on the bank account. And if the bank account does not have money, it will go into the negative, and all of a sudden you'll have FNB, Standard Bank, Nedbank, Capital calling you saying, hello, sorry, you owe us money. That time you owe 200 Rand, but you owe them money. According to the system, you owe them money. So it's important to also look out for those types of things. 2 last things that I want to speak about. The first one is understanding that you don't have to settle with a banking product that the first bank offers you. And it's so funny because when we're looking for not credit cards, when we're looking for investments, when we're looking for deposit accounts, we're very critical when it's our money that we're putting into the bank. But when the bank must give you money, you are almost so vulnerable that you will take any offer that is put on the table. Hell to the no. Hell to the no. When you invest your money and put your money into a deposit account and they promise you a return of 8%, that return comes to you. When you borrow money and they charge you 8%, that 8% goes to the bank. So both ways, somebody is going to get a return. So what does that mean? It means that you must shop around, whether you are the return receiver or the return payer. You must shop around. You do not settle on the first interest rate that you are offered, on the first credit facility that is offered to you. Shop around. Shop around. I just learned the power of shopping around the other day. You know, I'm usually also a very first option that is put on the table, I will take it. And I did this with my printing of the books. Now, when I started doing the kids' books, I didn't anticipate the cost of a hardcover book because I had moved from a soft cover to a hardcover because for durability and kids and the target market, a hardcover book is a far better book, right? So we did this hardcover book, and then when orders started streaming in and I needed to have books printed, I realized that the unit cost of printing my books was sitting at like 400 Rand. How much do I price these books at if it's at 400 Rand? So I was like, there's no way I can't pay this amount of money. So I went back again to the same company and I said, guys, I need a better rate than this. They said, okay, you need to print more quantities. I said, okay, let's see what it would look like with more quantities. They gave me different rates with more quantities and I was like, still, this unit price, because the lowest it went to was like 300 Rand. I said, this unit price is not going to work for me. How much do I price these books? If you are charging me 300 Rand to print one book, I have to now charge parents 500 Rand a book. No one's going to buy my book. You know what I mean? So eventually I was like, you know what? Let me go to other companies. I looked for other printing companies. I think I looked for like 6 different printing companies. I sent them my specs and they sent back their quotes. I think 3 of the companies sent back the same similar quote and 1 company was coming below. And I was like, good shot. Took that one's quote, went back to my own because, and to be fair, the only reason why I took their quote I would have used them if the time allowed. The problem is they still needed to send me a proof, and then after the proof and I sign off the proof, then they're going to only start printing. It's going to take 15 days. And I was like, I can't let my customers wait that long for books. So I need this to be expedited very quickly. So I took their quote, I went back to my original printer and I said, listen, sweeties, if these guys can give it to me at this cost, you can make a plan for me. I really want to print with you guys. I genuinely want to print with you guys. I'm not trying to go anywhere else. You know what I mean? It wasn't my favor to print with them because as I said, they already had the material. They had printed for me before. I trust them. They've couriered books to me. So I knew they can do the job. But their price was just not working for me at the point. And I used another company to negotiate a better rate with them. We need to do this with the banks also. I did it with my car. One finance house gave me an interest rate. I took it straight to WesBank and I said, come to the parteki, give me a better rate. But the only way you can do this is by knowing your circumstances. I didn't know anything about printing. So I didn't know whether their costs were justified or not until I went shopping and found that some of their costs were not that justified. But I know interest rates because I know my credit score and I know my credit report. And there's no way you're going to give me that interest rate. You're not going to give me 11%. I don't care that the prime lending rate is 11.75. You're not giving me 11%. I have a great credit score. I am actually a great investment for the bank. They know I'm not going to default. They know they're going to get their money. They can see it is reflected by my credit score. So why give me a dizzy interest rate? Shop around. It's important to shop around. And the last thing I want to speak on is, guys, we're becoming overcommitted. We're becoming overcommitted because we think that credit or debt is somehow part of life. Yes, it is part of the financial system. Yes, you can use debt and leverage, debt to be able to build wealth. But it only works in certain circumstances. Don't find yourself overcommitted because the moment you're overcommitted, you do not have breathing space. And the problem with not breathing space in your budget is that it does not allow you to tap into the great financial tools that are available to you that make your life easier. Let me give you an example. If you are so overcommitted and you are spending over 70% of your income servicing debt every single month, it means that you may not have a disposable income, one, to pay yourself first, and that's putting money away in savings and investing. Two, to actually get a good risk mitigation strategy. So your medical aid, things like your life insurance, things like car insurance, things like household insurance, structural insurance, all of those things are part of what is called your risk mitigation strategy. Now, if you don't have enough money to pay for insurance, you're going to cut insurance out. And the day something happens, you're going to need insurance to step in. But because you've cut the insurance out, they're not there. But the problem is you cut them out because you're overcommitted in terms of debt. So it's important to make sure that your income to debt ratio, you've got an eye on it at all times. You need to make sure you've got a good income to debt ratio. As a matter of fact, at this point, I would want all of us to have an income to debt ratio that is at least a 1 to 5. 50%. 50%. If not, 30% of your income should be used to service debt. I know it's difficult. I'm not sitting here and saying it's easy. Especially with inflation, especially with interest rates going up, it means that it's actually the cost of borrowing has become so high in this country. For some people, unmanageable. But you've got to try. And part of your budget is to try and lower that income to debt ratio. Just try and lower it. Try and make sure that you're not sitting with a 1 to 7. Try and lower it, because if you're spending 70% of your income servicing debt or above, you only have 30% to work with to pay for savings and investments, living expenses, and also to make sure that you've got the right financial plan tools to help you in predicting your financial future. You want to have a life insurance, you want to have car insurance, you want to have a pension, especially if you are somebody who doesn't have those benefits at an employer level. If they're not sponsored by your employer, it means you need to go out there and get them yourself. Now, the reality is too many of us are living paycheck to paycheck, and we're living to pay debt and to live, and that's it. No money in savings, no money in investments, no money in risk. It's a risk. So make dead sure that you are not overcommitting yourself. Just because you qualify for a loan does not mean you have to take that loan. Because your debt-to-income ratio is going to be very important to determine other areas of your finances as to whether they will work or not. You can go sit with a financial planner, but if you're overcommitted, no great financial plan that the advisor can give you will work if you do not have the disposable income to be able to service that financial plan. I'm going to leave it here today, and I hope that this has left you with something to think about. Mwah!